This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen, kick off today's show discussing the new WASDE Report. The pair talk about how corn, wheat, sorghum, and soybeans are looking in the domestic and international grain market. Guy also touches on how the U.S. dollar is doing and how rain has helped with shipping. Finishing the show is K-State meteorologist Chip Redmond with a weather update. He explains the recent precipitation most of Kansas saw and how this weekend a few might see snow. That and more is coming up ahead on Agriculture Today. You're tuned in to Agriculture Today, and we start our Friday show with a grain market update. And this week we're joined by K-State grain economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. Dan, Guy, thank you both so much for taking the time to join us today.
Thanks, Shelby.
Kicking off our grain market conversation with what is wheat looking like specifically on the domestic side right now, Dan?
Well, U.S. domestic supply-demand balance sheet had just little change. There was a cutback of about 10 million bushels usage for food use, and the USDA indicated that for the October-December quarter, that's the lowest amount of flour usage on record. Guy, you and I were talking, and Shelby were talking before we came on air. Do you want to comment on that?
Yeah, I just, particularly being in grain science here at Kansas State, that low use of flour production is just, I think, indicative of what's happening in demand, not only here in the U.S., but particularly in the West. You've got countries like China, Southeast Asia, where that per capita consumption has been growing. Our demand on that has been waning. One of my colleagues in grain science was asking me today, well, why is that? Well, NASS just says it is, doesn't necessarily give us the why. So just speculating there a bit, I'd have to suggest, well, is it a shift in dietary preferences? Are we eating more rice, more potatoes, more other sort of starches? And I can't help but think is maybe the gluten intolerance, gluten-free fad sort of really eating into that demand for wheat products. And you have to believe that it is. And will that continue, or it's got to be a concern if you're in that flour milling sector.
It was interesting where it came from. The cutbacks that the USDA did were in hard red spring wheat, again, higher protein wheat, and soft red winter, which is, that has certain types of products that work well for that class, a little bit in white wheat. There's another change also, although the total export number didn't decline from the 725 million that the USDA had been projecting coming out of January. We did see an exchange of 5 million bushels lower, down to 140 for hard red, what we grow in the plains, and an increase of 5 million up in the hard red spring wheat area. So that just continues the trend of challenging hard red winter wheat exports. And, when we get talking about international trade, what's coming out of the Black Sea region, particularly Ukraine and Russia, both have a strong competitive impact working against U.S. wheat exports, as well as currency issues, which we're going to talk about later. So, Guy, any thoughts on that?
Just backing up to that food, the spread across the wheat by class, half of that 10 million bushels was hard red winter wheat, 5. And then 4 million of that was soft red
hard red spring, or hard red spring.
Yep. 4 at hard red winter, and then 1 in the white wheat.
Yeah. So the big issue is that dietarily, we're struggling on the demand base still quite a bit. It's not falling off, but it's sideways to lower. And you look at the overall move, we did raise with those changes, ending stocks about 10 million bushels, up 658, and stocks to use now is 35.2%, 35.21, and that's back up to where we were basically 2 years ago. Price 2 years ago was 763. This year it's 720. USDA projection. How about on the international side, Guy?
Well, on the international side for wheat, the bottom line, let's start at the end and then work backwards. The world stocks to use come down 32.5% compared to to a bit higher than that in January, but 34.5 a year ago. And I think that's just indicative of the situation. Even though it's tightening up, though, it's still a very comfortable situation. We continue to see prices lag. Nobody seems to be too worried about it. Digging into the demand side, China imports were lowered 500,000 tons. Keep in mind, though, that total Chinese consumption is the second highest on record, projected by the USDA, with the food sector at a record 116.5 million metric tons. So we continue to see good demand in the wheat situation in China, and you've got to believe that's going to help that import number for China. Looking at the production side, Russia forecast unchanged, 91 million metric tons with 51 million metric tons of export. Both of those the highest levels ever. Ukraine production at 23.5, unchanged. Exports were up 1 million tons at 15. Sort of a real changer year to year was the Australia crop, left unchanged at 25.5, but that's compared to 40.6 compared to last year, a record crop. So that gives us some hope we can compete there in the Southeast Asia market a bit more competitively this coming year. Canada unchanged at just under 32 million metric tons. EU at 134, exports unchanged at 51. So, look, there's plenty of alternative sources of wheat out there, and we're seeing a fiercely competitive market in that export situation.
I have a rebel opinion, Guy, and that's that, when I look at what's happened to the world, less China stocks to use the last 3 years. 2 years ago, 21.8%, 20.6% a year ago. This year now down to 19.6%. Lowest since 2007, 2008. And I know that the market is very myopically focused on available wheat right now, and it's cheap coming out of the Black Sea region, but yet we continue moving and have continued, even in this report, to move towards tighter ending stocks. I just think we're pulling the string where someday, if that Black Sea region can't come through with supplies, then we'll have to have a price response in the wheat market. Yeah. That's my own thought.
Yeah, wouldn't disagree with that at all. I guess it's a question is a major exporter stocks to use of 19%, is that tight or not? And it wouldn't take a big event to sort of change that, particularly given the current conflict happening in the Black Sea region.
And as we move on from talking about wheat, now moving to our next commodity, corn. And Dan, what are we seeing on the domestic side for that?
Almost no changes. Really, the only change was on non-ethanol food seed industrial usage. It moved down by about 10 million bushels, and total use down 10, ending stocks up 10. So really pretty much unchanged, up from 14.8 to 14.9% stocks to use. Big issue in the corn market is this 14.8, 14.9% stocks to use is markedly higher, way more plentiful as a projection than what we had the last 2 years at 9.2% stocks to use and 9.9. So we jumped to almost 5%, and the market is just not worried about supplies. It's become a buyer's market right now.
Yeah, very, very much so, and that's sort of flowing over into the global marketplace there as well. I guess the biggest contentious issue on the global situation is, we'll start with Brazil. USDA reduced that crop by 3 million metric tons to 124. CONAB, I don't have those numbers right off in front of me. Dan, if you could help me out.
CONAB came out this week, just right before the USDA report, said 149.4. So it's a major difference you're talking about corn, right?
Correct.
100, just under 114 million. So there's about a 10 million metric ton difference that has to be reconciled. The truth is probably somewhere in the middle, but at this point, it's a point of uncertainty going forward in the market.
Yeah, that 10 million ton discrepancy is quite material in there, and we'll see a similar situation when we get to soybeans. Exports were increased slightly by 2 million tons to 23, so again, plenty of corn hanging around there. We're also seeing other suppliers unchanged, such as Argentina, Brazil, Russia, South Africa, etc. On the demand side, this is where I sort of maybe have a different opinion of USDA. China still has strong demand in the corn side as well as the soybean side, and I can't help think but suggest that the Chinese demand is a bit overstated. I think they're looking at unchanged, but imports expected to be at 23 million metric tons this year. That corn and soybean number for China, I think, is going to move together because it's being driven by basically the pig numbers.
And Brazil cheaper grain than we have right now. So if China has a choice to go to Brazil for any of these crops, they're doing it each time out. It's a preference, geopolitical, currencies, whole bunch of reasons probably, but that they are going that way.
And as we round out this segment of our conversation, the last commodity for us to talk about real fast is, what is sorghum looking like?
Well, sorghum is probably one of the brighter pictures, I think, across the whole commodity complex, being driven mainly by exports and demand from China. Surprise, surprise. Exports were raised 10 million bushels to 240 million, and they basically took that number off the domestic number and tightening up the ending stocks a little bit. I guess they're showing them unchanged from February. So we should expect to see fairly good premiums domestically out there going forward.
So they took the USDA in that sorghum supply demand balance sheet added 10 million bushels up to 240 million of exports for grain sorghum, took it off of food seed industrial usage. So if you look out here in the country, in Kansas anyway, we're in the eastern 2/3 of Kansas, we're 20, 30, at times 40 cents higher cash prices. So it makes sense in our neck of the woods where we grow a lot of sorghum that if you're going to put the grain into an ethanol plant, gosh, corn's cheaper, than sorghum right now. So that makes sense. And the pace of exports, it's not consistent, but we've had several weeks where if we need a pace of 4 million tons a week to meet the USDA's projection, then we'll get 9, 10, 11, 12, and a lot of it's going, again, Guy, you used to be in China or stationed there, goes to domestic beverage consumption, doesn't it?
Yeah, biggest demand point of that's for the baijiu, which is a grain alcohol they sell as a health food. I think it cures the COVID.
Oh, okay, good. Whatever.
Dan, Guy, we're going to cut to a short break now, and then once we come back from that break, we'll continue our international and domestic conversation about commodities and then also looking at a few macroeconomic things. So we're cutting to that short break right now, but we'll be right back. You're tuned back into Agriculture Today, and we continue our domestic and international grain market conversation with Dan O'Brien and Guy Allen. And as we continue this conversation, gentlemen, what is soybeans looking like?
Well, on the domestic side, we have a balance sheet that actually grew some in terms of ending stocks. There was a 35 million bushel reduction in projected U.S. soybean exports down to 1.722 billion bushels, and a little bit trading back and forth and seed and residual, a million bushels here and there. Total use, again, dropped by that 35. Ending stocks increased by that 35 million up to 315. So the stocks to use figure now is 7.6%. And just quickly, Guy, because I know we're going to take a look at this on the soybean oil side, there were no changes in soybean oil biofuel usage. 13 billion pounds, but the trend is sure strong from 10.4 to 12.5 to 13 now. We're continuing to step that up year by year in these marketing years. And Guy, I really think that there were no changes really in the domestic U.S. side, but what would change the domestic U.S. balance sheet would be response to maybe what would happen internationally. Yeah. So you want to take that over? Yeah,
just one point to make domestically. We've got a record crush number out there in the U.S. balance sheet. So we're sitting very strong, historically high crush demand, and that's being driven by that biofuels, and we're seeing it in soybean oil. Just to comment on the soybean oil, last year we had about as many imports as we did exports. This year the U.S. is sort of forecast to be a net importer of vegetable oil of about 70,000 metric tons. That's sort of a change in dynamics a bit, and that increased demand for crush is coming off exports one for one. Shifting a bit now to look at the export and international markets, exports for U.S. soybeans really is the darkest spot, I'd say, in the whole commodity complex. We're at the lowest level in 4 years, and soybeans exports historically about 60% of their production. It's a big chunk. So they really rely on that export market. USDA had demand down by 35 million bushels, and that's 272 million bushels less than 22-23 just last year. So that export market's real tough.
And if I could add in on that too, that when you look at the trends in crush, which is moderately higher, the trend in exports more sharply lower, we're certainly we sure seem to be transitioning our soybean demand side of the ledger more towards domestic biofuel production. That's just the reality of it.
Just to shift discussion now to the biggest soybean exporter and producer down to South America and Brazil. They sort of left those numbers unchanged. Not too much of interest there. One thing I point out, a couple weeks ago, we did have a couple boats of Brazilian soybeans trade into the East Coast. They haven't necessarily been executed yet, but that really sort of put a cap on soybean prices when those price relationships on that. We saw Brazilian soybeans drop nearly $70 a metric ton in a couple-day period 2 weeks ago. On the Brazil, they did reduce Brazilian crop by 1 million metric tons to 156. CONAB, though, has that at 149. That's about a 7 million metric ton difference on that. Dan, did you want to talk to that dichotomy there a bit?
Well, I think the USDA is being cautious in terms of how they deal with changes. I guess I think that, again, the truth may be in the middle or the truth may be lower, because I've seen some lower estimates also. But what it does, I think it just kind of punts forward having to put a hard number on what dry conditions may have done down in Brazil. And so it puts the onus on the March, April, and May reports to kind of finally arrive at what that final number is and how it may affect the the world supply-demand situation. And if that happens, it comes back and lends support to U.S. exports, tightens up our balance sheet. But if that were to happen, it's probably happen around planting time in the U.S.
Yeah. Well, no, exactly. As we looked at China, they have their near record imports of 102 million metric tons, and they're starting to shift their purchasing activity now from the U.S., mainly coming off the PNW down to Brazil, and as you say, that generally shifts in March as we see South American harvest start to come off. And they got Chinese crush projected at 98 million metric tons, which is fairly strong. However, the big driver of that in China is, as we talked on the corn, is the pig numbers and that feed demand. And I think, that's going to be the telling factor, and we'll see how that plays out. The crush margins in China have not been real strong. And it's just even the Southeast Asia imports, they reduced by 500,000 metric tons, now just below 10. So that's the big unknown. I think that in soybeans particularly, but also we're seeing that in corn as well.
I guess I just add one thing in, Guy, for your response. When you look at almost all the seasonal price patterns that we have for these commodities, we come into February and we tend to not have a lot of volatility, and we tend to move here in the U.S. domestically for prices. We move into March, April, May, we tend to have more. With these numbers now on the U.S. side, it doesn't look like we're anticipating anything being challenged unless just the cash market says, hey, we can't get stuff. It doesn't. So this report kind of sets us up, I think, unless there's a surprise in South America, for prices to go pretty much sideways to maybe slightly higher, hopefully, in the next 1 or 2 months, but then in the spring to actually have to deal with these South American issues.
Yeah. Look, the big wild card, I think, in South America is Argentina, given the political situation down there. You've got a new president, Milei, who's trying to institute some changes. Congress is controlled by the other political party. It'll be interesting how they can do that. They did even up the export tax, so it's going to change the dynamics of oilseeds coming out of Argentina. But how that plays itself out, particularly in the environment of near hyperinflation that they have down there, over 200% a year, is going to have an impact.
And a day ago, I saw, within almost 1 minute of each other, one report that said, dry conditions are really going to harm the Argentine crop. And then right afterwards, abundant rainfall will just save the day. So we don't know. And maybe that's the fog of market news that's coming out.
Just on Argentina, if we shift to the geopolitical issues in that, it's we're talk about the shipping. We've seen fairly steady dry bulk index values for commodities over the last 30 days. It's come off since the first of the year, so that's a good signal, particularly in the wake of the conflict areas in the Suez, Red Sea, and Straits of Hormuz there. good news coming out of Panama. They have had some rain down there, which is raising water levels and expected to raise water levels into the spring months. And as the water comes up, that alleviates. And just go back a little further, the Mississippi's sort of sorted itself out. It's amazing what a little rain will solve a lot of problems everywhere. The other thing we always like to touch base on is the value of the U.S. dollar. It's been down in the last few days on that dollar index, but it's still at about a 90-day high. And that higher dollar value, particularly for the people buying our ag commodities, is making our commodities very, very expensive. And so cheaper sources in other locations really has an advantage as the U.S. becomes basically the seller of last resort across a number of these commodities.
So as we round out today's conversation, as we've been talking about the World Agricultural Supply and Demand Estimates report that came out this Thursday on the 8th, how would you guys respectively, internationally and domestically, how is the grain market doing in your perspective?
Well, depends whether you're a Kansas or Illinois farmer or an international buyer. Look, the prices have come down a bit. We should be pricing in some demand, particularly in the international sector, but we really haven't seen that come to town yet. With these lower values and input prices remaining fairly strong, it's just really squeezing the margins as that grower is getting ready to go to the field and plant this next season crop. So it's going to present some real challenges from the farm gate perspective in merchandising or in locking in those production margins.
And in financial management, and it is interesting. In the midst of all that we're hearing, you hear of major farm financial problems down in Brazil, and I'm not sure what that is. Is that dryness in pockets, inflation in costs? There's something going on, and talking to farmer groups here in the last day there. So even this week here in Kansas. Yeah, lenders, farmers are concerned at how low prices compare to their cost of production. Generally, the idea is that you look at our budgets, so the cash prices we have now cover direct costs for the most part. But when you start adding in then machinery and land costs and family living on top of that, that's really the challenge. So how are we doing? We have low prices. We're enduring February, and I wonder seasonally where we'll be. I'm still mindful of what Chip Redmond and other university climatologists have talked about in terms of weather risks this summer, but those things are not on the mind of the market right now. So I guess we'll deal with them when we get there, but we're sort of myopic and not really pricing in seasonal volatility on the futures anyway, in my view at this point.
Dan, Guy, I appreciate you both taking the time to join us today and give us our grain market update.
Thank you very much.
That was K-State grain economist Dan O'Brien, and he was joined by the senior economist from the IGP Institute at K-State, Guy Allen. I will link the recent WASDE report in today's show notes on agtoday.net. We're cutting to a short break now, but we'll be back with more ahead. You're tuned in to Agriculture Today, and we conclude our Friday show with a weather update. And as always, we're joined by K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, this past week, a lot of people in Kansas saw some rain.
A lot of rain. It's February. Most people think of not rain. We think of snow in February. And we had quite a bit of it, a nice long-duration rain event that spread really everyone in the state except for the far northeast didn't quite get in on it. But precipitation amounts varied greatly, but we saw as much as an inch to 2 inches in some place. 2 inches was down in the southeast, inch and a half across the most central portion of the state, really where we had the most drought conditions. And it was just a long duration. I think in the Manhattan area, we recorded precipitation every hour on Saturday, which is pretty impressive. And then we even had precipitation about half the day again on Sunday. So very rare to see a long duration event like that. It's a sign that the atmosphere is kind of blocked up a little bit, not quite. We're not seeing huge, rapidly moving storm systems. We're seeing these slow systems that are just slow to evolve and don't really move off very fast, which worked out really well. Most of the state averages anywhere from about 0.4 of an inch of rain in the southeast to 1/10 of an inch of rain in the northwest per week. And so when you talk about an inch of rain, you're talking 10 times to 4 or 5 times as much precipitation as normal.
And did that lead to drought monitor changes?
It did. We improved drought both in the north central and central part of the state, and then also in the northwest. Not huge improvements, but one category improvements. We're down to a very, very small percentage of the state in D3 drought. It's about 2.5% right now. The state is in D3 drought. So we've almost completely got rid of that, which is great. That means abnormally dry to severe drought still remains in places, mostly focused in that north central area, and then down in the southeast still where they had longer term impacts.
And something else a lot of Kansans felt this past week, quite a bit of wind.
Yeah, it's Kansas. We've been pretty much spoiled this winter with not a whole lot of wind, but we definitely stepped it up there Wednesday into Thursday, where we had some wind gusts over 50 miles an hour in portions of central Kansas. And we've been lucky. The fact that we've had a lot of cloud cover, and that tends to not lead into as much wind. And additionally, we had a lot more moisture, so any wind that we did have, we haven't had real fire weather concerns, but definitely stepped it up a little bit with a little bit lower humidity and stronger winds this week.
And a few warmer temperatures? Yes,
it's been warm, very warm. We've seen highs as high as the 70s down in the southern part of the state. And we've actually set a few records for the warmest overnight lows. So we're just not getting cold at night and in the 50s. So we set that both last week and this week. And when we look at long-term changes and trends in Kansas climate, our overnight lows just aren't getting as cold as they used to. And this is a great example of the last 2 weeks.
As we look forward now, what can people be expecting for this weekend?
So we've had that warmer weather. We're kind of on the downward trend now. The pattern has shifted. The jet stream is going a little further south. Still El Nino enhanced, so still an active weather pattern. But most of the precipitation will likely stick to the west and south of Kansas. We'll get a little bit of snow in the far west potentially this weekend, and a little bit of snow maybe in the southeast as well. But snow, not rain. Where temperatures are cooling off quite a bit, and we're seeing not quite significantly below average temperatures, but we'll be below average. We'll ride that line through next week, and then after next week, we start to get even cooler and definitely below average as we get into the end of the month.
And so into March, maybe having cooler temperatures?
Yeah, we'll keep the cooler temperatures. I think there's definitely potential late month for a pretty potent winter storm if that jet stream can shift back north. We've got a very active polar vortex right now, and not quite a lot of certainty on how it's going to evolve. It doesn't look like it's going to evolve with cold for us. We'll be below average, but parts of the northeast portions of the United States might have the opportunity for much colder. And we'll stay on that fringe of that, and hopefully that'll keep us continuing with moisture, even though some of us would probably like it to dry out at this point. There's still a lot of mud out there, but moisture chances should continue into March.
Chip, I appreciate you taking the time to join us today and give us our weather update.
Yep, thanks for having me.
That was Kansas State University meteorologist Chip Redmond. That's all we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.